I'm guessing you're all fired up from watching Grant Cardone tell you that cash is trash and you need to invest in real estate. Or maybe you're getting all these Chris Crone ads offering to teach you to buy hundreds of houses. Well, today I'll be sharing with you the top 5 reasons to invest in real estate, and this is gonna help you decide if investing in real estate is right for you. And by the end of this video, you're gonna know exactly why real estate needs to be in your investment portfolio. My name's Devin Cook. I don't pretend to be some financial guru. I'm learning right alongside you. So why should you even consider real estate as an investment? Well, there are a lot of different opinions, and each person is gonna have their own preferences in terms of what they like to invest in. Because if you've spent any time on the internet learning about finance and investing and building wealth, you've probably heard all the stock gurus, all the day trading guys talk to you about how real estate is so risky and stocks are the only way to go. And then almost immediately you're hearing from some real estate guru that's telling you how awesome and how great real estate is and all about their monthly cash flow. Is this sounding familiar? So which is actually better for you and everyone else out there? The great news is I just made a video comparing real estate and the stock market, so I'll leave a link in the description and make sure to check that video out. But the short answer is everyone needs at least some real estate in their portfolio. And I'm gonna give you the top 5 reasons why that's true right now. Now the first one, and this is a huge deal, real estate is what's known as a hard asset. And that just means it's physical. You can touch it, grab it, look at it, or better yet, live in it. And how many types of investments do you know of that you can actually live in? I can only think of one. And what makes a hard asset so attractive? One word: supply. If you've ever seen a supply-demand curve, you know that as supply goes down, prices will go up. And the inverse is also true. And there's your economics 101 class for you in one sentence: supply and demand. And unless something crazy happens like Elon Musk figuring out how to colonize Mars, we can't just create more land. The amount that we have is finite, meaning there's not gonna be any more created. And even if we colonize Mars or something crazy like that, there is still only a limited amount of space on this earth. And that's what makes real estate so unique. You can tear down a house or a hotel or a mall or the like button and build a new one. That will always be the case. But the raw land that sits underneath these buildings and these structures can never be duplicated, and it will always be there. And as our population continues to grow, and with more and more people buying land and real estate each year, the price of real estate is going to continue to rise just like it's done in the past as the pool of buyers increases. And as many buyers have experienced in this last year, it's not so fun to try and buy a house when the supply is so low and the prices are so high, because that just means that your options are super limited. Which brings me to the second reason that real estate is such a great investment, and that is control. If you're like me, you want control over your life, the choices that you have, the options that you have, and real estate as an investment gives you greater control than any investment I can think of. And imagine this scenario with me for a second. If instead of investing in real estate, you invest in stocks, say that you buy 100 shares of Apple stock, and then you say to yourself,
hold on a minute, they've really messed up this whole iPhone 12 thing. They would have sold way more iPhones if they had a hot pink iPhone. And obviously if they sell more iPhones, I'm gonna get a greater return on my investment. And I own 100 Apple stock.
So what do? You call up Tim Cook, CEO of Apple, and say,
hey, what gives? We need a pink iPhone. Where's it at?
And obviously you can do that because you're an investor in Apple, you own the stock, and you have Tim Cook's phone number on speed dial. But no, that's not quite the case. Because while yes, you are technically an investor in the company, you technically own a portion of the company, the portion that you own is so small. And as a stock investor, unless you own a massive position in a certain company's stock, you're not gonna have any leverage to change what happens within the company. Even if you have a great idea that would significantly increase the company's revenue and your returns as an investor. I bring this example up so you can see how much control you don't have in other investments when compared to real estate. Because with real estate, you not only get to pick the market that you're buying in, you get to pick the price that you're willing to pay, you get to pick if you're gonna flip the properties or if you're gonna rent the properties out and hold them long term. Or maybe you want to renovate the property so that way you get a higher return on your investment. And maybe you're the kind of person that wants to be really hands-on, so you hand select your tenants and you deal with any issues that come up. But maybe that's not really your cup of tea, so you get a property management company to take over. They'll handle all the maintenance and even collect rent for you. You control everything in real estate. Maybe not the market in general, but you control a whole lot more than you do with buying stocks. And I know a lot of people talk about having issues with tenants and pipes bursting and all of those issues that come up. But the great news is you're in control of that as well, because you control what tenants you allow to rent out your properties. And you're also in control of what price range you buy at. And if you choose to buy $500,000 rental properties, you're gonna have a much different caliber of tenants applying to rent your properties than if you bought $100,000 rental properties. And when you're talking about your money, your retirement, and your investments, you want control over it, don't you? And another thing that you get to control with real estate is the financing of it. Because the third thing that's so great about real estate is leverage. And leverage is just debt. And when you use debt in your investments, you get the benefit of using other people's money, which means there's almost an infinite supply that you have access to. Now, obviously, you'll need to be well qualified to get access to this money. You'll need good income, you'll need good credit, and you'll also need to have some money available that you can use as a down payment. And the biggest benefit to using debt is you really get to stretch your money, or amplify it if you want to think about it that way. And this is really going to maximize the returns that you get on any investment. For example, say that you have $60,000 available in your bank account and you're ready to invest it, and you're choosing between stocks and real estate. Well, if you go take that $60,000 and invest it in stocks, you're going to get $60,000 worth of stocks. But if you take that money and invest it in real estate, you can buy a $300,000 piece of real estate, effectively multiplying your money by 5. And I don't know about you, but if I could snap my fingers and multiply my money by 5, I would do it in a heartbeat. And when that property that you just bought appreciates, not just your $60,000 is appreciating, but the total $300,000 is appreciating, which is just, again, multiplying your returns on your investment. Now, if you're sitting there thinking, well,
$60,000 is a lot of money to spend,
and you just don't have that available right now. Well, the good news is with real estate, you can get in a lot cheaper than that. Because yes, if you're buying a property strictly for an investment, you would need 20% down. And that can be a lot of money and take a really long time to save up. But, and this is the great thing about real estate, if you're buying a property that you're going to live in, you only need 3% to put down on the property. And if you're a veteran, or if you live in certain areas that qualify for USDA loans, you can put down 0%. You heard me right. No money. Now you may be thinking,
well, that sounds cool and all, but is buying a house for myself really an investment?
well, that really just depends on how you look at it. My opinion is that if you buy a home that's your personal residence, I don't think of it as an investment, because instead of the property paying you, you're having to pay the property to live there, because you're paying the mortgage, the property taxes, all of those things. But over time, real estate has been shown to increase in value. So if you want to think of it just from the appreciation standpoint, then yes, you could consider your personal home to be an investment. Now I know you may be thinking,
Well, if I buy my own home and I only put 3% down but want to buy another property for an investment, I still have to put 20% down, and that's just too much.
well, there's a couple ways to get around paying that 20% down payment. Because once you've bought your personal residence and you're living in it, you can then decide to rent out that property and go buy another home that you're gonna live in. So now you've effectively bought 2 properties with only 6% down instead of having to put 20% down just for one property. Pretty cool, right? And since you're cool enough to hit that subscribe button right there, I'm gonna give you another super awesome bonus tip. You can also do what's often known as house hacking. And this is where you go out and you buy a duplex or a triplex or a fourplex. And as long as you're gonna be living in one of the units, you only need to put down 3%, not that 20%. That's a bit out of reach sometimes. You can then rent out the other units and the tenants will be paying the mortgage for you. And if this is done correctly, you're not only gonna be living for free, you're gonna get paid to live there. And who doesn't wanna get paid to live somewhere? Now, the fourth benefit that comes with investing in real estate is the massive tax benefits that come with it. In my opinion, and from the research I've done, there's not a single asset class that the typical investor can invest in and get as many tax benefits as you get with real estate. And here are some of the examples of the tax benefits that you get. The first one is that you get to depreciate your property. And that means that every year you get to write off 1/27th of the value of the property against your taxable income. And you get to do this because the IRS assumes that since you've bought a physical asset, over time that asset will deteriorate, it's gonna need maintenance, repairs, and it's just gonna wear out over time. Over 27 and a half years is what they've determined. And that means on a $300,000 real estate property, you get to write off $11,000 just in depreciation. And if you're in a 25% tax bracket, that's almost $3,000 in savings on your tax bill. And if you're in a higher tax bracket, your savings will be even higher. You also get to write off any expenses that you have with the property. That means that any repairs, renovations, insurance costs, property management fees, or even marketing fees can all be used as tax write-offs to decrease your total tax burden. And on top of that, you can also write off the interest that you pay on your mortgage. And you can see that when all these deductions are added up, it can save you a ton of money on your taxes. And this is how people can actually be making money on the rental properties, but still be paying no taxes because of all these tax advantages. And this brings me to the last point that I'll make. The biggest and best reason to invest in real estate, the money, meaning the return that you're gonna be getting on your investment. Now, there are 3 main ways that you can make money in real estate. Number 1 is through the tax savings that I just went through. Number 2 is through the cash flow that the property produces each month. And cash flow is just the net profits that gets put in your pocket every month. So if you have a $2,000 mortgage and expenses each month, and your tenant is paying $2,300 in rent, that means that you have $300 in positive cash flow each month. Now, it's gonna be a good idea to save a portion of this to create an emergency fund when different repairs and maintenance expenses will inevitably come up. But once you have that emergency fund set up and you're feeling pretty secure with it, the rest of the money you get to use however you want. And cash flow is one of the most important parts about an investment that sometimes people forget to think about. It's easy to forget about cash flow when investing in stocks because not all stocks pay a dividend, and that's not something that all stock investors prioritize. But Warren Buffett, one of the greatest investors of our time, built his portfolio on the premise of buying companies that produce cash flow. Because if you're investing in stocks, you're buying a company and you're planning on holding for the long haul. How else are you going to benefit from that investment and from cash flow that it's producing? And the third way to make money from real estate is through appreciation. Now keep in mind, there's no guarantee, none whatsoever, that your property will appreciate in value. But if you buy a property and you hold it for the long term, think 5, 10, 15 years plus, it's not guaranteed, but it's almost guaranteed that it will appreciate in value. Because any graph that charts the price of real estate over time will show that it does trend in the upward direction. Even if you bought a house in 2007 at a super high price and then it tanked the following year in 2008 with a real estate crash, but then you didn't sell that property and you still hold it today, well, that property would still be worth more valuable today than it was in 2007, despite that market crash. So unless you're wanting to just leave your money in the bank and watch your buying power decrease because of inflation, you're gonna want to invest in real estate. Because with the great tax advantages, the cash flow, as well as the appreciation, real estate is gonna really benefit you when looking at your retirement goals and your wealth building goals overall. And now you know the 5 reasons that real estate should be in your investment portfolio, and hopefully this video has helped you further your investment goals. So thanks for watching. Make sure to click on this video right here, and I'll see you in the next video.